Welcome to another edition of Give Me Some Truth for Expats. Dami la verdad, or other things Keith would try to wittingly put at the beginning if he were here.
Right.
He's not. I'm Stan Farmer. I'm here with Syl Michelin, and
Hello,
today
everyone.
we have a very special guest, panelist, if you will, that's going to be talking with us today. Mark Vanderlinden, a tax attorney in New York who runs a firm called Cross-Border Tax Law. Is that right, Mark?
Correct, yes.
Mark, why don't you tell us a little bit more about your background and the type of things that you do for expat clients around the world?
Sure. So, I said my name is Mark Vanderlinden. I am the founder of my tax firm, Cross-Border Tax Law. And I've been about practice for 25 years. My background is started with big four accounting firms, EY and Deloitte. I ran the Dutch desk in Deloitte for about 12 years in the US. And basically 22 of my 25 years spent working and living in the US. And that was a big eye-opener for me because the US tax system is so completely different than the European tax systems that I was used to when I was starting my training and education. So I kind of focused on becoming a bridge between those two tax systems because the differences are so vast that people easily make mistakes, and the gray areas are so wide that basically in the gray area you either make a mistake, which is costly, but that's also where the opportunities lie. And that's the whole game plan of my firm, is to steer you away from the pitfalls and bring you to the opportunities when it comes to any cross-border transaction that you're looking at, whether that's a straightforward cross-border investment or maybe something more drastic like a complete migration to another country.
That's very interesting. So, I mean, to kind of clarify things for the audience, as a financial advisory firm, as a registered independent advisor, here at Wagner Condon, our expat team also works to help our clients, avoid the pitfalls, regulatory issues, or having the wrong types of investments, or taking an estate plan that was designed to work in California and taking that abroad somewhere where the rules are much different. So it's all about navigating different rule sets that apply in the residence country in America, right, Mark?
Yes, well, I think it's both, right? It is dealing with the plan, the system that America has is a blessing and a detriment, right? As a U.S. citizen, on the one hand, if you leave the country, you don't have an exit tax that like a green card holder would have, that you get taxed at the border, everything you build up, all your deferred gains, all your 401ks. You don't have that, so that's a blessing. The detriment is that the U.S. is one of those countries that will chase you wherever you are in the world and will force you to file a tax return and pay taxes. So if you look at your business and my business, I think they're very, very running on a synchronous path because, building wealth and protecting your assets requires both a current financial plan, but also looking at the tax impact. It's a necessary part of that. And if you don't actively plan how to deal with your tax burden, you risk losing some of the income and gains that your firm generates for the clients. You risk losing that because you don't anticipate that there's going to be 20 or 30 or 40 or 50% tax loss down the line. And for a lot of people, they say, well, paying your taxes, just biting the bullet and that's it. But that may be true if you live in the US and you retire in the US and you die in the US. Yeah, you're in a singular system. And in a singular system, you really cannot escape a tax burden, right? Because the system is designed to tax you from your birth until your death. And the only question that you have left is, well, what year am I going to be taxed in, right? And you can play a little bit with that year. But once you move across the border, once you move into a different taxing jurisdiction, you break through that closed system. And all of a sudden, the question arises, well, maybe I don't have to pay tax on this. Or maybe if I plan it a little bit, I'm going to pay much less tax on this than I would ever pay when I'm in the US. And that's kind of the interesting nugget, I think, that I can bring to the table, is to see and build that component of taxation with the financial plan that you guys build for your clients so that you know what your end outcome is going to be when the dust settles.
Right.
Absolutely. And I think, I've told many clients that our goal ultimately is to deliver strong returns on an after fee and after tax basis, right? And that's important because, like you said, Mark, you could be the best investor imaginable and deliver great returns, but if at the end of the year you end up with a tax nightmare on your hands, then it will all have been for nothing. And so our goal is always aiming for really strong after-tax returns, and that requires a good financial plan, a manager who understands what types of investments to make in a particular jurisdiction, and also having strong tax support, right? Strong accountants around you. And I think that's where having professionals like Mark in our network is really valuable for clients.
Absolutely. I mean, just as you need an estate planning attorney to draw up your wills, create trust where appropriate, etc. We can make a plan and make assumptions based on what we think the tax outcomes will be. But when it comes to implementing a strategy to reduce tax, that's where people like Mark come in. And it's very important part of the process.
I think if I may, while we're on the podcast, let's do some myth busting while we're at it, because these are the things that I generally get, three major myths that I get thrown in my face all the time by my clients. One is to say, well, I only have to pay tax in one country, which is sadly not true. There's no international rule that says if you pay tax in one country, you don't have to pay tax in the other country. That's myth number one. Myth number two is, well, there's a tax treaty. So we're good, right? The tax treaty will help me with this. And this is what I tell my clients. Listen, the US tax code is about a foot and a half thick, right? Your foreign tax code, if you look at Portugal, for instance, is about 2 inches thick. The tax treaty is 36 articles. And of those 36 articles, probably 3 will apply to you. So you can already see, based on that the tax treaty is not a band-aid for all. It does plain vanilla stuff. It does for 70% what it's supposed to do and what it's intended to do. But in a number of cases, the tax treaty is not a band-aid for everything, and it doesn't solve your problem. And you can truly be taxed in both countries at the same time. And the third myth that we have to look at is that clients say, well, I have an item and I'm going to look at that item in the other country. For instance, I have a 401k. So my 401k is a pension. So it treats pensions. And that may be, from a gut feeling, that may be the right approach, but it actually isn't, because the first question you have to ask, well, the 401k being a pension in the US, is it a pension in Portugal?
Right.
Because Portugal will classify a bag of money, because that's what a 401k is, under Portuguese rules. And it may well be that Portugal says, well, the 401k is not a pension, it's just a bag of money. And if it's a bag of money, it may be an investment account. So those three myths I frequently encounter in my business. And I think it's helpful for the attendees to understand that there's multiple layers that you have to go below. But at the same time, this is, again, as I said before, this is where the opportunities lie. Because, hey, if the foreign country doesn't treat your 401k as a pension, maybe that could be beneficial for you.
Absolutely. And so, Mark, clearly you have a very global background and a global client base, but you just mentioned Portugal. And I think Portugal is probably the country that's been keeping you busy recently. It seems that, there's a very clear trend, in favor of just moving to Portugal in the expat community. And certainly here at Walkner Condon, we talk to a lot of Americans who are interested in relocating to Portugal. So what's going on there? Why is this happening?
Well, Portugal is very hot right now for multiple reasons. I mean, there are multiple reasons why people want to leave the US, whether it's polarization or different stages of life, or the kids have left the house and you actually want to travel more, and of course what the US has great has great nature, but what Europe has is great city culture, hundreds and even thousands of years old, right? So to immerse yourself in that's a big appeal for people. Another thing that I see with people that are planning to move to Portugal and they're more in their retirement age is that the most uncertain factor in the US that you have is your future healthcare cost. You know you're going to get sick somewhere in the future. You know the US healthcare system doesn't cover you in full. So you need to reserve a very significant portion of your build-up wealth and or assets for any future mishaps that may happen, when you max out on the US insurance. Well, Portugal has a national health insurance, and it's actually very, very good. So, you hear of people there that go into the hospital and they pay, $100 bill for spending a day in the hospital. That's not even feasible in the US. So if you can carve out that part and say, I'm going to move to a country that has a good healthcare system and that's very well affordable, I have more disposable wealth available to myself to spend on my wife and myself to have fun with, because I don't need to reserve significant amount. Well, if you add to that, an excellent wine and food culture they have in Portugal, if you add to that if you live one or two close airports, Lisbon, Porto, Faro, that for like $100 you can take a budget airline and fly to Berlin or Paris or Athens or Rome and spend a weekend there or a week there for $100.
Yeah, it's like cab fare in New York, and you end up in an entirely different country.
Exactly, and then you can experience some of the perks that Europe has, culture-wise, food-wise, and I think definitely those are the appealing factors of it. Now, granted, it's not for all, because you are moving to a different country. You're moving to a country with, I don't like the companies and the webcasts that say, well, it's really great. In the morning you have a glass of sangria and then you hop into your golf cart and you play an 18-hole and the sun shines and life is great. No, you're moving to a different country with a different culture and a different language. So it's not a paradise, not for all. But I think if you plan this right and with the right conceptions, it's going to be a really great location. I've helped a number of clients move to Portugal and they really love it. So I think with the right mindset, it's going to be a great new phase of your life that you can enter into. And of course, if you compare that to some of the other European countries, what makes Portugal very interesting is they have an NHL regime, which gives you access to a flat 10% rate of taxation for the first 10 years. It gives you access to where normally as an American, you can stay only 90 days in the Schengen zone and you have to leave the Schengen zone. It gives you a residence permit in Europe, which means that you don't have to leave every 90 days. You can travel through Europe, for years in a row, and that's going to be fine. And another benefit of the NHL regime is that it gives you access after being there for 5 years to actually apply for Portuguese citizenship. And now you can have a Portuguese passport.
That's a very good point. That's one point that I don't usually touch on, but that can be very important to people who are thinking long-term life in Europe, right?
Yep.
And so I think obviously on a podcast like this one, we can't give specific advice to people. Obviously, we need to make an assessment of people's entire financial situation before we can really give advice. And I think that applies to us, that applies to you, Mark. But maybe what we can do is share at a high level some of the important talking points for people who are considering moving to Portugal. Would it be fair to say that Portugal is one of those countries where it would be beneficial to start talking to an advisor or an accountant prior to even making the move? Would it be fair to say that would be an ideal time to start making that assessment, and potentially there may be beneficial steps that you could take before you even land?
For sure, and I think for multiple reasons. Right? One reason is to know in advance of what you're getting yourself into and what your tax costs are part of your financial plan. Secondly, tax planning only works prospectively. So, if you say, I'm going to fly to Lisbon, I'm going to buy a house and sit there, and then I'm going to call Mark, well, you're too late because you're already in the country.
Right.
If you look at planning before you migrate, as I said before, the systems don't align. So, the grind arises in the fact where the two systems are different, but it's also where the possibilities arise. So with some decent planning, you can actually substantially lower your tax rates. And that may well be a very good thing because it has a national health impact on your financial plan. But mind you, when you do this kind of planning, and this is something that I see people make a mistake in, right? When they look at moving to Portugal and they say, okay, I'm going to talk to an advisor. They say, we're going to find a Portuguese advisor. I have a US advisor that I have within the US I'm very happy with. I'm going to find a Portuguese advisor to help me on the Portuguese side. And the problem with that selection in that approach is that your Portuguese advisor doesn't know the stuff about the US. Your US advisor doesn't know the stuff about Portugal. So this works great as long as the systems are the same. But the moment that the system starts to deviate, you got a deficit in your advice. Right. On top of the fact that when you move from the US to another country, you're moving from the US domestic tax system to the US international tax system, which is way more complicated. And that's why basically the approach that we take by building that bridge between the two countries and holistically looking at you from both sides at the same time, I think is a very strong and valid approach. And because you're a US citizen and you're still stuck with one foot in the US tax system, there's three prongs that you have to look at when you do this kind of planning and when you do this kind of decision. One is optimization. How can you optimize the outcome of your financial plan and your components therein, whether they're deferred tax or whether they pre-tax or post-tax? How can you optimize your position? That's the first prong. The second prong is minimization. How can I minimize your tax burden? And with that, you have to basically bear in mind that minimizing your tax burden in Portugal doesn't help you if the US just picks up that difference in tax. Your minimization only works if it works in two countries at the same time. And therefore, you need an advisor that can understand two countries at the same time. Otherwise, saving 6% tax in Portugal and paying 6% more in the US doesn't really help you. And the third prong is utilization. And with utilization, we mean, well, if we happen to pay tax in one country, can we use that tax as a credit in the other country? If we pay Portuguese tax on my 401k distribution, and I can use that tax in the US against my US tax on the same 401k distribution, I'm utilizing my Portuguese credits. If I can't use my Portuguese tax in the US, I'm actually paying double tax.
Right.
So that's the third prong you have to be aware of. And once those three things are aligned, you got yourself in the most optimal situation.
Yeah, all three, very important. Agreed.
Absolutely. And so, I think we're near our allotted time here very soon, but wow. I think it went by really fast. I feel like we could just be talking about this forever. But anyone listening who may be considering a potential relocation to Portugal for lifestyle or other reasons, right? I've not had the pleasure of experiencing the Portuguese lifestyle. I know, Stan, you have a little bit.
Yeah.
But we'd love to have a chat. And we'd be able to put you on the right track. And certainly if there are referrals that we're able to make to external professionals outside of our firm who may have the right expertise to work alongside us in really building a financial plan that will truly be holistic, then certainly we'd be able to point you in the right direction. And I think, Mark, you've really displayed your expertise here in this, just even in this short introduction. So
one thing that people have to adjust to when they move to a place like Portugal, right? It's a Mediterranean culture. It's very relaxed, right? Mark, you're in New York, right? You're like in the opposite of relaxed, right? So
is it
people
Portuguese
have to understand
time?
that we, you can have your US based, expertise.
Right.
You're going to need some boots on the ground expertise in Portugal. They're going to move at a different pace than you'd like them to, right?
Yes, but that's actually, it's a good pace to be in, right? To slow down a little bit and enjoy the world and watch the world go by. I'm European. One of the things that I enjoy when I go to Europe is just, whether you're in Paris or in Rome or in Lisbon, just sit on a terrace, have a glass of wine. It's going to put you back $3. And just watch the world go by and just enjoy, good quality of food. Portugal has a lot going for it. It's just to give you an idea, just of some of the things that may be relevant for the people, right? Portugal hasn't, especially now with Ukraine going on, Portugal hasn't changed their borders in the last 900 years. The same country. It has a great climate. It has a very low crime rate. There's an annual listing of quality life of expatriates. It's on third place. It's a very stable country. So I think for your golden years, what you want is to relax and to maybe drop the speed down from fourth gear to second gear and just enjoy.
Yeah.
And they got great food, they got great wine. It's great to travel. So actually, for me, Portugal is very high on the list to retire.
Yeah.
When I get to that point.
Yeah. I mean, the adjustment of pace. I mean, first of all, your healthcare is more affordable, but like just the relaxation. If you can,
it's going to improve your health.
If you can really adjust to that pace, it probably add years on your life too, and reduce your need of healthcare.
Yeah, because if you look at, from a European perspective, right, we always talk about, the Mediterranean diet. Well, if you look at the Mediterranean diet, it's a lot of fresh food, a lot of fish, a lot of, good fats like olive oil and that kind of stuff. And what you see comparable to like US supermarkets is what I love when you're in those countries, that you go to the local market and buy local produce and fresh olives and that kind of stuff. And it really tastes so much more different than when you get from an average supermarket.
Right.
And I think that's part of the quality of life.
I miss I would say there people ask me all the time, what do you miss about France? And oftentimes I say food. And a big part of that is the market culture.
Yeah.
It really makes a big difference.
I like the 2-hour lunch breaks.
Yeah, that doesn't hurt.
Yes.
Either.
2-hour lunch breaks with wine.
Yes. Mark, and beyond the people who want to, spend their golden years more relaxed, what about the digital nomads? What about the younger folks that maybe can do what they do and do it anywhere?
Well, the digital nomads is a very interesting group of up and coming, what we see nowadays. They need to take a different approach because the digital nomads generally, in my view, should not go for a residency per se. To find themselves in one country, because unless you're an independent contractor, then that will be a good way to go. But if you're like still employed for the company, but you can work remote, which of course is very prominent now after COVID, being resident in a country triggers a lot of issues for you and your boss, your employer. But there's a lot of planning you can do for those people that go travel, let's say 3 months in Spain and then 3 months in Italy, and that kind of approach. And what's interesting is that the US tax system facilitates that. If you spend your whole year outside the US, you're less than 30 days in the US in a given tax year, you can exempt $108,000 of your income from US taxation. Now, that's interesting because if you are not a resident anywhere else, you're 3 months in Spain and then 3 months outside Schengen and come back for 3 months in Italy, you don't generally trigger a tax liability in those countries. So if you don't pay tax in those countries and you don't pay tax in the US on the $108,000, you can basically make $100,000 tax-free, which is pretty nice.
Wow. See, I could easily see this being a completely, we have to have you back, Mark, because I could see this easily being a podcast on its own. Maybe the varying degrees of nomadicy. How would you even say it?
I don't know.
But whatever the word is, how maybe, people who consider themselves digital nomads, maybe they're not being nomadic enough, or maybe, the different ways that you could organize your business so that you are an independent contractor, and just the variety of ways that people, can work from home and leave home and set up homes abroad, right?
Yep, and this is something I discuss with my clients. If you save 40% tax, you can work 40% less and still have the same amount of money. Yeah.
Wow. Well, I mean, who doesn't think that sounds attractive?
Yeah.
Not this guy. Well, thank you so much, Mark. It's been as educational as expected. Appreciate you having coming on our podcast. Like to have you back sometime soon. It's been great. Thank you.
No, thanks for having me, and I look forward to working with you and the Wagner Condon group, because I think it's a very nice service that we jointly can maybe give to the clients in a very holistic and full body one-stop approach way.
Yeah, I mean, absolutely. I mean, I always tell clients, look, I can identify areas of need when it comes to tax, but if your accountant is not on the same page, then my advice doesn't really count for much, right? I mean, so communicating with professionals such as yourself, it's always been a very important part of the practice. And you know, it's not easy to find somebody that thinks proactively and outside of the box like you do. So that's very, very valuable.
Well, I said I'm very happy to offer my services and work together with you guys on your clients. And if your clients ever have questions about tax, feel free to reach out to me and go through your local advisor, and they can get hold of me.
Terrific.
Sounds great. Thanks a lot, Mark. Thanks, Dan, and we look forward to having you back on soon. And with that, we'll conclude today's episode of Give Me Some Truth.
Yeah.
International.
Bye, Mark. Thanks.
Take care. Bye-bye.
Wachner Condon Financial Advisors is a registered investment advisor with the SEC. Registration with the SEC does not imply a certain level of skill or training. The opinions expressed by the participants of this podcast are their own and do not reflect the opinions of Wachner Condon Financial Advisors. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Thanks for listening, and for further information, please visit WachnerCondon.com.